All right, guys, let's not make you wait any longer. I really appreciate you coming here on a Sunday. I know that all of you take every day you have with your families important, with friends. Some of you are actually doing church virtually, so I really appreciate you taking the time out, coming to listen to me. Today is a very special day. We're going to be teaching the line in the sand. So whether you're here on a trial or just showing up for this, I believe what I'm going to show you today could really change your life. And I really mean that. This is a simple process. It does take a little bit of trend and a little bit of patience on your part to be able to take this trading. Okay? To take this trade, you got to be able to see the probability in this trade. It does not feel normal, it does not feel natural. And a lot of cases, when price is moving down into this line in the sand, and I will be showing you different looks at this, you'll start to see what I'm talking about. Now, this thing works more times than it does not. The probability of making a trade off of this and making money is amazing. But again, we do need to take a couple things into consideration, such as trend and formations of candles off of this line in the sand. And sometimes we will actually not wait for the formation of the candle, we'll just take the trade. And we'll talk about that too, okay? So even though you're not waiting for the formation, we call that forecasting, or we call that front running the system. And anytime we do that, we are aware of it and we're not fully allocated. Okay, so we'll go into that. So today I'm going to tell you about the line in the sand, how it's created, also trend, why it's important when taking the trade off the line in the sand, and then give you a little bit of insight of trendy methodology when it comes to trend, because it is different. Okay, it is different. And then we're going to talk about the bands. So for my members in here, I really want to make sure that none of you guys are forgetting what the actual trend is, and you can see it here. Okay, so going into this week, we have weekly bullish trend. We'll talk about that. Next thing we'll talk about is how to execute this trade. Okay, so how do we execute this? We always have an entry, a stop, and a target. Always. I do not trade futures without stops. Okay, just want to make that very clear. Do not take future trades without stops. If you're new to future trading, you know, and if you're not new, you also know you can lose a lot of money very quickly if you do not have a good strategy and if you're not using stops. The next thing I'm going to talk about is targets, and I'm going to briefly go into targets because our members who are subscribed to the Trendy library, they have access to understand how to find targets. So I don't want to go too deep into how to find targets. We'll just kind of base it on, what you're looking for when you first start this process, okay? And then I want to talk about stops, all right? Where's the appropriate place to have a stop on this methodology or the strategy that I'm about to show you? Okay, so are you guys ready? Let's go ahead and get started. We're going to first talk about line in the sand. What's the definition of the line in the sand? LIS, right? It's just a line. I kind of joked around with my wife this morning. I said we went out to the pier and hung out by the water or the dock. And I said, I'm going to open up this WebEx and I'm going to say, hey, this is a line in the sand. You go long above it and you go short below it. Thanks for coming. See you later. It sounds crazy, right? But a lot of times it really is that simple. And a lot of my members will tell you that here in the room. This line is powerful. Now, this line in the sand is created. I'm about to sit here and tell you, not the exacts, but the line in the sand is created, okay, from a pivot that happens between the RTH, regular trading hours, and the maintenance. So afterwards when the regular trading hours closes and you see the kind of futures messing around for several minutes and they're doing their thing, they create a pivot. So when we create a pivot in the market, you actually create a candle formation. That candle formation is also, as some traders would call it, a supply and demand formation. Okay, understand that. So we create a pivot when we come into the close, regular trading hours, and then we have that maintenance time, and the price between the time we close and that maintenance creates a pivot. Is everybody following along? So I'm going to ask you after I tell you certain things to please let me know if you're getting it or if you don't get it. It's okay if you do not get it. This is why we're here. Does anybody need me to show you that by drawing that to you? I love drawing, by the way. All right, so you get it? Good. Draw, please. Okay, cool. First person wants me to draw it. That's what I'm going to do. All right. So what I'm saying is, if price moves, I love drawing, guys. If price is moving here right into RTH, okay, so here it's 3 o'clock, okay. As soon as we close, what happens, RTH, let's say that we close here, okay, right at this high. Let's just call this 2600, okay, 2600. What happens is you have maintenance in here, right? And anything can happen. So usually they'll wait about 15 minutes after the markets drop some kind of news or something, and you create a pivot. So candles are just kind of working in here, doing their thing. Let's just say that we get bad news, okay? Just so happens that they come out with something in the market, some sort of catalyst, some sort of news that creates this pivot. Let's say in this case, it does this. What you are going to see on my charts is called the line in the sand. Okay? That line in the sand may come right across here. Okay? So we're going to, LIS stands for line in the sand. So what happens is we actually have a pivot there, or what we call an inside and down candle. You guys seeing that? Everybody understand that? Okay? So think about this. So when we open up for night futures, okay? When we open up, typically what we'll see is an inside and up, and then a move back into the line in the sand. And what do you think happens here? We usually reject. Exactly. But why do we reject there? Exactly. This guy's catching on super fast here. We created supply between the RTH and the maintenance close. Okay? Absolutely amazing. Okay? So we have structure around this, and just the opposite of this, if we would have created a catalyst that moved the market up, okay, we move the market up, and I'm going to draw this again, okay, just so we can all get on the right page before I start teaching here, and I am kind of teaching now, okay, RTH, okay, comes in about right here, kind of mess around, the market closes, right, and then we get some sort of catalyst that pushes price here. The line in the sand is created, and then we have this line around here. So let me ask you this question, since you guys, you're not allowed to answer anymore. Why? Next person. If price starts to break down, what do you think happens around the line in the sand? And why? Nice. Support, demand, great. So just that time between the RTH, regular trading hours, okay, regular trading hours, into, can somebody, Espinala, I think is what it is, can somebody just put the link in here really fast? Kind of like put it in here so that they can see it. Anyone that's coming in late. Good. Thanks, Jake. I appreciate that. All right, guys. So we find support. We created demand. And we create an inside and up. This is the kind of stuff that happens almost on a daily basis. Almost on a daily basis. Now, we're going to get into this. I just wanted to draw this for you so that you can understand what we're getting into. Okay? So this is how the line in the sand is created. Anybody have questions before I move on? This is just the creation, the definition of the line in the sand. Anybody need me to show them anything else before we go on to the next step? They are. They are. And each line in the sand here at Trinity Options is created daily. Okay? So daily. After RTH, we have a line in the sand that we literally use all day long. And then at night, when we close, we create another line in the sand, and we provide this blueprint to you at night. Okay? So every time the market closes down for that maintenance period, we're going to have a line in the sand. Okay, we'll get to execution stuff later. Okay, all right, so I'm going to move on. That was the definition of line in the sand. This is how it's created. Okay, all right, let's get back to the charts now. Now, what you're going to see today, what I'm going to show you, instead of going back for 150 days just to prove that this is probably one of the best strategies out there, I've literally just put on 10 days. Okay, 10 days. I've already studied this since the beginning of the market. All right, let's go ahead and just kind of look at my chart so you familiarize yourself with this. The blue line that says LIS is the LIS. The good thing about scripts is we can always go back and back test. So you can see the different LIS. There's one hiding under here, underneath the trendy edge. We're not here to talk about trendy edges. And then up here, line in the sand, just so you can see for reference, line in the sand, and going back, line in the sand. You get the point. So there are 9 days on here that we're going to be looking at the line in the sand. Let's go ahead and go to our next topic. This, in my opinion, is probably the most important topic around the line in the sand, and that is trend. Now, trend can be 3 different directions. Can somebody tell me what those are? Up, down, and sideways. There you go. Now, how do we find an uptrend? Higher highs and higher lows. Okay? Such as, this is your high, this is your high. This is a low, this is a low. As you can see here, higher highs, higher lows. You typically only need to go back 2 to 3 pivot points, and those pivot points should stand out to you, right? Higher highs, higher lows. And then opposite of that would be lower highs and lower lows for the downtrend. And a sideways trend could be higher highs but lower lows, or higher lows but lower highs. Anybody lost? I think that's pretty straightforward, but if you're brand new to trading, it might sound a little crazy. Everybody understand the typical trend? Okay. So we're going to move on here, and we're going to get into a little bit of trendy methodology that sets us apart from the rest of the crowd. Okay? We look at ranges. So every time I come into the market, I'm here to make money on the daily when I'm looking at futures. In most cases, I'm not taking a futures trade and trying to hold on for weeks. That's just not me. If I wanted to do something like that, I would actually just use my options in the SPY or something. Okay? So let's look at ranges and talk through this. Okay? So trend for me and what I teach here is all about the ranges. So when we open up and we look at these pivots, so for example, let's just talk into tonight. Tonight's Sunday, right? So futures open tonight, okay? We're going to use the range. Now for me, how do you find the range? And I always tell everybody, you need to draw on this. If you have a computer at home, download for free Zoomit, Zoomit. That's what I use to use all my cool things here, and just learn to find trend. All right, so like this is a range, and then we come down, and then we start the range over, okay, and so forth, just like that. All right, so for me, coming into tonight, the way that I find trend is I simply find the pivot low to the pivot high, and as long as price is holding the 38.2 and the 23.6, both of them are different. I won't get into too much details because we have members here who have actually paid for this. Is between the 23 and the 38 is bullish. Okay? So as long as price is holding this area here, the trend is bullish. That's trendy methodology. Okay? So I'm always thinking that before I go short. So in this case, if I found a formation, and we'll get to that here in a second, that was breaking down underneath the list, I probably most likely will not go short because we are still holding the 23.6. Okay? And then in a downtrend, all I do is reverse my fibs. And as long as we're staying below the 23 and 38, we are in a downtrend. Okay, we're staying in that downtrend. So I wouldn't be looking to go long. All right, so this is an uptrend. And no matter how we look at this, okay, you can see here when we started out on Friday, we were uptrending. We were making higher lows and higher highs. Now, let's get into the list and talk about what did we see and how do we trade it. Let's just like scratch everything and just make this super simple. All right. When price is above, please write this down, folks. When price is above the line in the sand, we look for it to be support. When price is below the line in the sand, we look for it to be resistance. Are you following along? When price is above, we look for it to be support. When price is below, we look for it to be resistance. It's that simple. Why? Because it's a pivot. It's a supply or it's demand. One of the two. And depending on the trend of the market, I want to stay on the right side of this trade. So you can see here, when we were trending on Friday, we moved through the line in the sand. The first touch of it over here was resistance. And we say this thing in the room. It's resistance until it's not. But what does it's not really mean? It means we're looking for formations. We're looking for inside and up or higher highs. Your eyes should be focused here. This is an inside and up. We already have scripts that tell us this because we get a nice little arrow that points up to the sky. Okay? Price comes down into the line in the sand. We look for it to be support until it's not. Listen to me. We look for it to be support until it's not. Somebody tell me what it's not looks like right now. I want to see if anyone's listening. So this was resistance until it's not. This is support until it's not. Until we break under the list. Okay, but what needs to happen there? Thank you. Jennifer, inside and down. Inside and down. Not once did price break this and create an inside and down. Okay, John, what's that look like? Well, these are 5-minute candles, folks. 5-minute candles. That means you're going to have to wait about 15 minutes. What did I say in the beginning of this? This takes a little bit of patience. It takes the line in the sand needs to be on your chart. It takes a little bit of patience, and you got to understand trend. If we're trending up and I'm looking for this to be support, I'm hesitant to go short. Because this did not create an inside and down, I will not be going short. Matter of fact, I didn't need to wait 15 minutes here, folks. It closed up above the line in the sand. Okay, and mind you, the line in the sand was here the day before. Okay, so this isn't something, this is not a trick. This is here before. Okay, and our members know that. All right, so what I'm looking for, just so you can understand what I'd be looking for here, is if price closed under the line in the sand, I would need it to recheck or somewhat keep a base here and then make a lower low. Stops would go in under here. We'll get to that here in a few minutes. And then I'd be looking to go short. Anybody not understand that needs me to show them anything else about that? Okay, so let's just go over this really quick. Okay, I don't mean to like just keep beating it into your head, but I really want to. So we have two formations here. We have formations, and we have a formation that did not happen. Okay. Here, what we see is a break of the line in the sand, and then we see a recheck of the line in the sand. I can't make this up. It's right there. This is what we teach to the exact. Okay? And then what happens? This candle here breaks above the base candles, breaks above the base candles, and we have what's called an inside and up. Trade is executed, stops are placed underneath the line in the sand, and boom. These are huge moves, guys. I show this almost on a daily basis. Okay? So very nice inside and up. And here, there was no such thing as an inside and down. Price moves up. When it comes back, we look for it to be support until it's not. May not look like a big deal to you, but the first time that it hit here, it bounced from 27.85 into 27.93, folks. Almost 10 points. 10 points in the ES is $500. Okay? $500. When it came back down, same bounce. This is huge. I don't even have to tell you. 27.85 into what we call the daily edge perfectly. 28.34. That's like so much math for me. I can't even it's like 30, 15, it's like 45, 50 points. 50 points, folks, $2,500. $2,500 by following a process where we're just being patient and waiting for price to come here. So let's see here. You said, so when we do down under the list, we need an IAD, inside and down, to confirm. Otherwise, it could retest the list and trend remains the same. Just clarifying. Yes. Okay. Now, there's something also that's very important about what I'm showing you. Looks pretty easy so far, right? But wouldn't you guys all agree that after we've assessed the trend, we understand what the line in the sand is, and now we know what formations to look for? What do you think is the hardest part about this? Pulling the trigger. Execution, as Mark Douglas would say, right? Execution by far is probably one of the most important things that we could do, okay? Patience, waiting for the formation, emotions. I mean, the list goes on, right? Are you in the right mood today? Did you make so much money yesterday you just don't feel like trading and you shouldn't be here? Did you lose a lot of money yesterday and you're trying to revenge trade and you're pushing it and you're not waiting for formations? Who are you today? Assess yourself. Revenge, GS, looking to take revenge because of Baba. I could tell, right? I keep notes on all you guys. All right, I'm keeping notes. I'm watching you. All right, I'm the ultimate revenge trader. There you go, man. I'm gonna teach you how to not revenge trade and actually make money. How to be patient and how to have execution, stops, and targets so that you can feel at peace when you take a trade. Okay? But before we do that, let's go back. So I've shown you formations. Now, what if we don't wait for the formation to happen? Say that price is coming down and you're just an aggressive trader. Okay, when you woke up this morning, you just knew. You're like, hey man, I listened to John and he said it was going to 28.10. What do you do here? Sure, it can be a starter. So if you do more than one, you buy the dip, sure, same thing. But you are telling yourself, hey, I'm forecasting, I'm front running the trade. When trendy options, when we say the word forecast or front running, we are admitting to ourselves that we are breaking our rules. We have a lot of rules. That's just one of them. So when you break a rule, let's say that your normal trade, you take five micros. If you're breaking a trade, you might want to only do two and add on confirmation. Can somebody tell me what add on confirmation means when we're talking about trading methodology? There you go. There you go. Okay. So the room is saying IAU or IAD, inside and up or inside and down. That's our confirmation. If we're wrong, we we always know when we're breaking a rule. That's the first step to actually becoming successful, folks. Understanding a process and understanding what means you're breaking it and when you're not breaking it. And a lot of people don't have a process. So in this case, we're breaking the rules. We're only going to start a position, or we could say something like, hey, if we usually do a 5-point stop, because I'm doing this, I'm only going to do a 2-point stop. Different ways that you can approach it, and you can fine tune that. But the one thing I want to concentrate on is that you're admitting that you just broke the rules, and now we have to trade this correctly. Okay? All right, so price just came down to there and we say it's support until it's not, and we don't wait for formation. We just take the trade. We're going as a starter, and we are saying to ourselves, if it confirms, inside and up in this case, so inside and up, if it came down, get a break, inside, up, we can add into that MES position. Okay, the hypothetical that I just gave you, we started with 2 MES, and once I get that inside and up, I add 3 more here. Okay? Everybody understand that? Okay, awesome. So in here, we also have the bands that are at top. And I feel like sometimes because we don't talk a lot about them, I'm always paying attention to them. We have bands in here that show what the weekly, the monthly, and the yearly trend is. So when we're looking at equity trades and so forth, right? So I always understand what the trend is. And if you think about it, if my weekly trend is extremely bullish or bullish, I'm thinking about going long, folks. I'm not, we can scalp. I show you many ways. We can scalp off of the line in the sand. We can scalp off the PMZ, which is this right here, by the way. Anybody notice this? Anybody notice this on my screen? So we're just going to take a little detour just really quick right here. What do you see? PMZ, probably one of our favorite trades around. You see it inside and up, don't you? There you go. Inside and up, out of the PMZ, we go long there too. We got all kinds of different arsenal in here that makes money. It's pretty insane. We just have to be patient and wait. We have a room full of serious traders in here. And now that we've created a process around actually making money, and when we lose money, it's small, pretty fierce group of people in here. Okay, pretty awesome. So let's go back and kind of look at the market as a whole. We talked about trend. I've taught you the definition. We talked a little bit about execution, but I'm not quite ready to get into how to execute with bracket trades and so forth. Let's go back and look at the market as a whole this last couple, like 2 weeks, 10 days of trading days or whatever. Okay, I think we could all agree right here when we look at this trend. What do you see? Anybody? What's our current trend? And let's see. Let's keep going here. Sideways, sideways. Good, good. Range bound. That's right, ammo. Neutral. Yeah. So when we come into the marketplace and we look up and to the left before we cross the road and get run over, we always want to be looking up and left or down and to the left. Nobody wants to get run over, right? We want to save money. We're good stewards of our money. We're here to make money, not get caught up in chop. Okay. Now, I will tell you this, it's all about perspective. Okay. So the right answer, looking at what I just showed you, is we have lower highs and higher lows. Okay. So we are sideways in this picture I showed you. However, it's all about perspective and it's about you as a trader. You get a little bit more than what you asked for today, but I go over this a lot. Who are you as a trader? I get so many questions and I ask, who are you? What are you here for? Are you here to make money in 5 minutes, 30 minutes, a week? All of that is so important. And you need to know that before you ask me a question, right? So if you're a swing trader and you're asking me about a 5 minute candle, it doesn't really make sense. Okay? If you're a scalper and you're taking it off the weekly candle, it doesn't really make sense. Right? So it's all about perspective. And if I were to break this down for you, remember, let's get in the habit of drawing out your ranges. If I were to look at this, I would tell you we're in an uptrend here. If I looked at this range, I would tell you we're in a downtrend. I would tell you we're sideways here. I would tell you that we're uptrending here. And I would tell you that we're downtrending here. Everybody sees that, right? So when we come into the market, make sure you're looking up and to the left or down and to the left, getting a big picture before you get into the day, before you take the LIS. Okay? So we know that we're coming in today. We're going to trade the line in the sand. Assess what we're in. Does everybody understand that before I move on? It's so important. I'm going to take a sip of my coffee that also has a little bit of rum in it. All right. So, so here we are, right? So let me ask you this question. This is going to be really important for everybody that's listening in right now. If we assess, okay? Now my members are going to know this. Some of you that just kind of joined me might not know this. But if we assess on this day that we have this really big run, right? This is a big run, folks. Down here at 2712, 2714, all the way into 2800. What do you think is most likely to happen when we open up? Please answer. Consolidation. Great. Nope, not pullback. Mm-mm. Consolidation. Okay? I want you guys to be on the right track. Josiah, I don't know if you're new, if you just came in here, but basically after big moves, we're looking for consolidation. What is a big move? Something that's probably out of the daily ETR or ATR, sorry, not ETR, daily ATR. Okay? So it just needs to kind of chill out. It needs to digest the move. When I say the word digest, I want you guys to really take this to heart. And I hate to be so graphic. When I say the word digest, it means consolidation. It means it is going to chew you up and spit your butt out. Do you understand that? If you do not know how to be patient and you are not a master scalper, you are going to get chewed up. Everybody on board with that? But I just want to trade, right? I really want to trade today, man. I lost yesterday. Yeah, there is. There's a list of acronyms. Okay? But if you can understand that this is about the bigger picture and I want to help you find a process of making money consistently, not today. You want to see income coming into your bank account on a consistent basis. We're here to, I mean, this is a job, folks. We're making money. This is not, boom and bust cycle. I'm not teaching you that. If you want boom and bust cycle, I could send you to like 50 rooms that I know about, right? Hey, look at this lotto I got. Awesome. And then next day, boom, they're down 50 grand. Okay, I can send you there. What we want to do is consistently make money. Okay? So we need to understand trend. So when we come into this here, somebody has me on. That's you, Nav. You need to. There you go. Good job, man. Thanks. All right. So here we are, sideways action. Let me ask you this. So we've all already decided that this is going to be consolidation. Can I ask you a question? How do you think that the list is going to fare during this day? Can anybody tell me? Anybody? So we assess that it's going to go sideways. We know we want to trade the line in the sand. Okay. Yeah, exactly. I would have to say back and forth. So basically, what you're saying, Chris, is like it's going to be choppy, man. Okay? Yeah, you get chopped and screwed. Makes sense, right? All right, awesome. So in this area, yep, no trade as a position. Very good. So when we come in here, now I'm going to zoom in and show you, and I want to take it step by step so that everybody is understanding what's going on here. Do you see that here we consolidated and we wake up and see how we actually get a run through here? Boom, nice move. This is after a period of consolidation. This right here, absolutely stunning. Consolidation, and then look at this move. Boom. So just assessing that, where do you think that you want to be the trader? You want to be the trader after consolidation. So what is the best way to approach that? Honestly, folks, it's very simple. I show this all the time in the room. Just put a block around it. Okay? You can walk away too. And Pat, I'm actually going to answer that. So put a block around it. That's exactly what I was going to say. Put a block around it, set an alert here, set an alert here. So your alert here would be at or above this price. And here it would be at or below that price. Once you get the alert, come back down, into your position, take a look at the assessment. Hey, it's breaking out of this area now. Now I think I like this trade. Where are we? Are we creating an inside and up? If we're creating an inside and up, I'm going to take the trade. Okay? Everybody following along with that? Now, if I were to take you and zoom this in around that consolidation period, okay, and show you the action around the list, which is right in here. There's a lot going on here, folks. Now, I'm not saying you can't make money using my process during consolidation. That's what's pretty cool, right? And I'll say that out loud and very transparent. We actually make money in here when the market's up, down, sideways, whatever, just by being very good, I guess, students of this process. Okay? And so you can see here, we have inside and downs. We take the trade to the downside off the list. Right here, we have an inside and up. You could take it over through. Inside and down, take it down. So we're making money by being patient around the line in the sand, but your bigger moves are not coming until we break out of the box that I just showed you. Okay? So let's just kind of look at some data. Underneath the trendy edge, and again, we're not here to talk about the trendy edges, we had the line in the sand. I remember this day. I told the folks, I said, man, that's pretty cool. I bet we get a big move off of this. Guess what happens? Okay, let's look at the time frame down here. Down here, we close. You got some overnight action, consolidation. Can everybody see this? If you can't see this, please say. No one's going to make fun of anybody. Can you guys see that that's consolidation? Does that just make sense? Can you see that now? But John, you should be asking this question. But John, what about, like, how do I know it's consolidation? That's what you should be asking me. If anybody can answer this, I'll be really impressed. I actually already told you. But how do we know that we're starting consolidation? See, somebody that's sort of new to trading should be saying something like, well, that's easy after the fact. That's hindsight, right? No. Okay? Sure. You can first look for that. Yeah. You can look at the trend. But another thing, don't forget, okay, so I'll repeat it again. How do I know that we were coming into consolidation? Come on, folks. Big move. We had a big move. It's that simple. Don't make it difficult, guys. We had a big move where? From here to there. Am I right? Okay. So we're coming into this day after a big move. Yeah. Raul, we're not going to talk about edges, but we know that the edge is magical. So it came down to our edge, folks. That's one answer, and it stopped. And if you follow me on Twitter and you just came in, then you would remember this day. It was not too long ago. We talked about that. Okay. And so it came down into the edge, but it came off of a big move down. And when it comes from a big move down, automatically you need to be thinking sideways action or chop. Okay. So to confirm that sideways chop, then we get into the answers that you gave me, Jake, right? And you folks before that, the sideways action, the indecision, right? The sideways trend. That's your confirmation. Iron condors on this day. So if we're coming off a big day, and let's say it's a Wednesday, option expiration day, we're probably looking at doing iron condors, right? So if you're into that kind of thing. Okay. And Sean, I don't think he's in here this morning, but that's like one of his favorite things to do. So if we're coming into an off big day, we look at iron condors or even put credit spreads or something like that, okay? So anyways, we don't expect anything from here. Put a box around it, wrap that little present up, and when it's time to open up the present, make some money. That's how you need to look at it. You like that analogy? Write that one down too, okay? All right, let's get to the next line in the sand here. Okay, let's see what we got. We topped out over here. We could see that. We're looking up and left and getting an idea. The first thing that you should be asking yourself is, what trend are we in? So if we come over here, we can see, right? We have lower highs, very easy, okay? And we have lower lows. Everybody in agreement with that? Lower highs, lower lows. All right. So if we have lower highs and lower lows, and today's the day we're going to trade on the list, what are you thinking? What are you guys thinking? Inside and down. Nice. Okay. Now, I want to be very clear though. I'm never biased. I say I'm not. I might be on the inside, but I never show my team that I'm biased. I think that conviction and being overly biased can really cost you a lot of money, folks. A lot of people take a lot of pride in their conviction. And the problem with that is you're not using technicals in a lot of sense. You're using your emotions. I don't care what you say. Yes, that is right, JTM. Okay. In my opinion, conviction comes from emotions. Okay. You are not smart enough to know what the market's going to do. Any moment, news could drop. But looking at the trend, you can come into this trade and just say to yourself, hey, I'm not really looking to go long. I would much rather take the short off of this. Sure. But what I will tell you is this did exactly how we say. Despite the trend from upper and left, what do you notice about the line in the sand? I want you to look at price. And let me zoom in for you just in case you guys can't see. There you go. What do you guys notice? When price came down to the line in the sand, what do you notice? Acted as support. That's right. It acted as support. What else? Bounced. Yep. Okay. So each time that it came into the line in the sand, what formation did we get, guys? Remember, let's start to talk about what I'm teaching you. So one was support. Yes. Okay. Good. Inside and up. Inside and up happened at the line in the sand. Okay. Look to take the trade. Regardless. We don't know what's going to happen. That could have turned into a 40 point bounce, man. I don't know. So we're talking probabilities. See how I just led you into probabilities? I have shown you many line in the sand, okay, on different days, looking at a different trend. If you could mute your mic, whoever just came in. There you go. Thank you. You're still not muted. Please mute. Test. Okay. Sounds pretty good. Thank you. All right. So inside and up, off the line in the sand. Okay. Boom. Boom. Both of these resulting in a lot of points, folks. Okay. I'll tell you that right now. Like I said, most traders that I talk to, especially starting, they're only looking for a couple $100 a day, guys. That is well worth more than $100. Okay. All right. Tell me what you notice over here. Broke support. Good. Inside and down. And the LIS. Exactly. Exactly. Okay. What do the arrows mean? The arrows, those are actually identifying for me when to go long and short. But some of the arrows are with our script for the EMA script that you see in my cloud. So they're different. Okay, some of them are different. I can't give away all my secrets. But I'm giving you guys something here. I'm telling you right now, if you join this session, I'm giving you something that can make you money for a very long time. You just paid 29 bucks for this. I bet you your ROI on this is going to be awesome. Okay. So here we are, inside and down, inside and down. Boom, you finally get the flush. See, I'm not having to like figure out all kinds of different things that are going on with, any other strategy out there. That's all I'm going to say. This is pretty straightforward, right? And it's a non-biased approach, what I think is super important. Okay? All right. Yep. So inside and down and making a lower low. This is bonus here. Okay? Bonus right there. Now let's move on over. Okay, I'm just being transparent here. Everything I do is impromptu, by the way, if you're new here. I'm not into PowerPoints or anything like that. I record and then send the information out in our library. Okay. All right, so here we are. Let's see the trend. Okay. This right here, when I look back, I see a powerful move. That's a big move, folks. When you agree, very big move. Consolidation, sideways. Okay. When was this? Over the weekend. This is Sunday night. Okay, and it came off the list, by the way, inside and up, right here. But to be fair, let's see, 1500. This happened on the close, so I would not be taking a trade into the close. That's just me. Okay, and we'll get to that here in a few minutes about execution and so forth. All right, so sideways action. I think you guys would agree with that. Sideways action. Then we open up. You get your new list and so forth, and then we look for the line in the sand, which is way down here. Because of the big gap, the line in the sand was not at play. Okay? There are, every once in a while, there are days like this where your line in the sand on these huge gaps, they're not going to be in play. The only way that your line in the sand would be in play on a gap down like this, or gap up, sorry, is if price were to come down into that line in the sand, and guess what? You have that demand there. We would be looking for that move off of here. Everybody understand that? Everybody understand? Okay, I'm going to get to that here in a minute, Dex. Great question, okay? Again, actually, I think I brought that up a few minutes ago. Okay. Dex asked, let's see here, if I can find his question just really quick. I know I just saw it. Oh, I thought I did. Where'd it go? There it is. Are you waiting for the break of the list to make the trade? Am I waiting for the break of the line in the sand? Anybody know? Not necessarily. Let me give you a couple looks at it, okay? Let me give you a couple looks. Let's just say that price was underneath, okay, and price is moving up. Let's say it did this, but the inside candle's here, and the inside up is here. Well, these are confluent, and you'll see this happen a lot. So the up happened right at the line in the sand, boom, take the trade, stops go underneath, trade it up to my targets, okay? If we do not wait and we just wait for a momentum, let's say we have a momentum squeeze. Let's say the line in the sand is right here. Price is moving up at a velocity that looks like this. I wouldn't even, this is me, okay? This is me. I wouldn't even wait. I don't even care. Well, what I'm saying is I'm not looking for formation. As soon as it pops over, I'm taking a trade. I understand that I'm front running. I'm going to place a stop. And hey, if it moves, it moves. If it comes down, creates an inside and up, I'll add on confirmation. Okay? All right, so we had consolidation after that big move that I just showed you, and then we had the line in the sand. Sorry about the yellow, folks. I got that on there for our members. We did a broad market analysis, and if you're new here, make sure you go to the broad market analysis, watch the video before we get started into tonight, please. Okay? Make sure you watch that. It's under the channel broad market analysis. Okay, and I will show you here in a second. We're going to get to that here in 1 second. So don't worry about the yellow. Okay? You can see here, price moved up here into the line in the sand. Okay, broke above, inside candle, and down underneath the list. Stops go in, take the trade to the downside. Okay, notice we're resistance at the trendy edge and or the list. Here we have inside and inside, no inside and up. Bunch of chop, right? It's a bunch of chop coming after a big move. So once we assess the trend, see how much I went into trend, folks? Trend is so damn important. It really is. Look up and left, look down and left, assess the trend, look at the probabilities of the trade, but notice also how the movement around the line in the sand creates an opportunity every single time. Okay, so we've assessed the trend. Let's move on. Let's talk about actually executing the trade. First of all, how much do you know about futures? I'm going to make this super fast. Okay, so on the ES on Thinkorswim, okay, on Thinkorswim, very simple. Over here, see where it says active trader? See where it says active trader? A lot of people don't see these ribbons over here. You got a dashboard, level 2. You can even look at news if you're into that. Big buttons, active trader, time and share, sells, trade, okay? You're just going to click the active trader. This is going to pull up what we call a dome or a matrix, okay? Now follow along with me. How many of you have the ability to do this right now? And if you haven't done this, make sure you have. We're going to simply click here. Okay. We're going to do, let's just do a bracket trade. Let's do this step by step with each other, okay? You're going to click trigger with bracket. Everybody there? Awesome. And by the way, you can do this on equity and everything else, okay? And you're going to come in here and you're going to read carefully. Limit is where you're going to sail, like make your money. And stop is going to be your stop, okay? Okay. So we can do this on options as well in TOS, which is super cool. I did that for you guys on Friday. All right, so what we want to do for me, this is all about your risk tolerance. Now, every setup that I showed you, for me, okay, a disclaimer, guys, usually people put disclaimers out there before the video. This is not investment advice. This is a methodology that I'm teaching you. It's just a process, all right? Tweak it around like what you like. Everybody's different. But for me, most of my trades, I don't even have to put in more than a 5-point stop if a 2.5 point. Seriously. Okay? Because I'm patient, I'm waiting, I got a reference point. So we want to make up two different trigger whip brackets. So what we're going to do is we're going to come over here and let's just say, you know, what are most of, any of you guys actually future traders? And again, this doesn't have to be futures. This could be equity and so forth. And I'm going to show you that here in a few minutes, okay? All right. So what kind of stops do you guys usually use? Anybody? to 5 points. Okay, I like that. So let's just say that 3 points, okay, 3 points is a minimal. Like, this is like, hey, I'm not too sure. Hey, I'm front running, something like that. Just name it whatever you want. All right, so I'm going to say I want 6 points, right? And this is going to be 3 points like Chris had just mentioned. So what I'm going for is 1 to 2 here. Everybody in agreement? Okay. Notice one thing they don't show you. These guys, man, I tell you what. See this little thing right here? It's like subdued. You can't see it. We're going to click on that. So we got the 3 in here as a stop, and we got a 6 as a return. Click on this, and we're going to name it. I'm going to name it whatever I want. Trendy test with room. Okay. Everybody following along? All right, and I'm going to save that. So now, when I come in here, guess what? Somebody had just asked me the question, and I apologize. I'm not looking at the messages up here. Okay. No, I'm not trying to sell an existing position. I'm getting ready to take my trade. Okay. So what we do is we come in here and we look for, okay, let's just say that this thing was sitting over here with trigger with bracket. We're going to click on this, and then you're going to go down to whatever you named it. In this case, I named it Trendy Test with Room. Boom, look, it pops up. 3 stop, 6 limit. All I do, folks, is I come over here and see how it shows up? See how everything's on the bracket? Does everybody understand this? Okay. And let's say the price is coming down into my list here. I find the number where that's at. Boom, I click it. Now here's the thing. There's a couple things I can do here. This can be a set and forget trade. So let's say that price over here, and again, this is all hypothetical, folks. If price was up here, we assess that as an uptrend and starts moving down, and we say, hey, this is, support until it's not. It comes in. You can do 2 different things here. If you front run it, you could have, at some point in the day before you went to the beach, you can set your bracket trade up so that, you're executing here, stops under here, and targets over here, right? So it's all set up. Don't need to do anything. You just walk away. Boom, I'm done. Okay? Or you're the patient trader and you happen to be in front of the screen. You get the inside and up. You come over here and then you hit buy. Boom, click. Click that mouse. Boom, click the mouse. Okay? Everybody understand? And then if you have a little bit more of a risk tolerance, what we can do over here, okay, trigger with bracket. Let's say, I'm looking for 10 to 15 points. I could put 10 in here. And, well, actually, let's make it like, it's been very volatile. Let's do 20 points off the list. And I want a 6-point stop. Okay? And we call this one the big one. Okay, the big one. Save. Okay. Let's go down here. See this right here? It says big one. All I do is click on it. We have save templates. Make sure that these are correct before you go clicking. Make sure it says stop, the smaller number. Okay, you guys following along? And the limit says 20. Something like that. You guys understand what I'm saying? Because I've had these where I might have messed up in here and I put the 20 down at the stop and a 6 for the limit. You don't want to be that person. It is an OCO. It really is. At the end of the day, this bracket is an OCO order. Yeah. You could do an OCO here as well. I look at it, it's a little bit different, but a bracket is just, hey, I know where I want to get in, I know where my stop is, and I want it to execute here. Whereas this is a conditional order based off of 2 different parameters. Yeah. Okay. One cancels another, or other, sorry. All right, so I always use just the bracket trade, okay? All right, guys, so that's a bracket trade, okay? Now stops. Let's talk about stops. I mean, don't you want to be making more money than what your stop set at? Most of you, right? Would you agree with that? I think you would all say yes. You don't have to say yes, but I would think so, right? We want to make more money than what we're getting stopped out at. So make sure that your risk to reward here makes sense. Okay, none of you guys should have a stop at 10 and trying to look to get 2 points. If you are, you're not doing this right. Okay? All right. Now, what's important is when we create these formations at our line in the sand and so forth, what I personally like is to be underneath that formation. You guys follow on that? Don't fall asleep on me. Stuff's important. You guys following? If we're going to place a stop, we want to be underneath that formation. Okay? So for example, say we're going to the long side. Say price comes down here tonight. We get the inside and up. Okay? I want to be taking the trade when we break the up candle or the base candle. And my stop, I want it underneath the formation. But let's say like as soon as we take it, that underneath the formation is only 1 point. Sure. But in this volatile market, 1 point doesn't make a lot of sense to me. So in most cases, okay, in most cases, what I'm looking for is basically to set around my risk tolerance. So my risk tolerance might be 2.5 to 3 points. So I'll still keep mine at 2.5, 3 points. That's me. Okay. But if it happens very quickly and we start getting a powerful move, obviously I'm going to start raising that stop, right? So where do we want to put the stop? If it was here, right? Where do we want to put it? Let's say this happens and then this happens. Where do you want to put your stop? You can put it wherever you want, by the way. Disclaimer, you put your stop where you want to put it. I just do it where it actually makes me money. Below the formation, okay? Under the inside base, good. So both of those answers are right. Say Jim has a higher tolerance for pain, and let's say Jennifer doesn't, okay? Right. So you could put them in two different spots here. First of all, you're making money. The question that I like to ask myself, folks, so this right here, this is Jim, right? This is where Jim wants to be, right? And this right here is where J and B wants to be, okay? That's okay. It's up to them. But you need to be asking yourself the question, how much of a profit am I in? And which one of these makes more sense for me? Let's say when we took the trade here, we're up 20 points. But this one here means I would only make, I would still make 10 points. But Jim, if he were stopped out, he'd only get 2 points. Who's the smarter person? Just kidding. Which one? It's up to you. It's up to you. Maybe Jim took 20 contracts and Jen only took one, right? So it's up to you. It's your trade. Trading is personal. Everybody's different. But what I'm telling you is be smart about where you place your stop, folks. Okay? Again, if we know that the pivot down here looks like this and we gap up and you put a stop, so you had no idea where the line in the sand was, most of you traders, guaranteed, would put your stop right about here. What does that mean? That means when price comes down and you get stopped out, people like us here at Trendy Options are going long. I don't make this up. It's true. Okay? We're going long at the LIS. Most people are going short. I know this because I have friends who post this stuff out there on Twitter. And they post it in their rooms. And they're going short right into an area where we're looking to go long. So remember in the beginning, I actually told you that the hardest thing about this is executing. So we told you the definition. We talked a little bit about trend. You guys say that you're on board. You understand that. Always look up and left and to the right before we take a trade. Up and left, down and left. And after we've assessed the trend, let's look for formations. Let me ask you a question. Are you one to wait for formations? Or are you the person that likes to jump right into the trade? You need to know this before you try out this strategy. And you need to position yourself in a way that it reflects whether or not you're aggressive or you're not. Okay. Then you have to execute. So I showed you the bracket trades that really, really help out. You know why they help out most of all? Can anybody tell me why they help out? Risk management, exactly. Okay. Because you know your loss and it's disciplined. It removes the emotion, Tammy. But Tammy, great point, but I want to say something. We're all emotional. I don't care if we have a process or not. Let's just be real here. All right. Trading is super emotional, especially if you're coming off a loss or if you're coming off a big win. You know what I mean? I see people in here all the time making huge wins and they feel invincible. And so they might not put a stop, or they might think they're going to do the same thing again and lose half the money they made yesterday, or even sometimes worse, most of it. But it does create that mechanical approach, Tammy, right? It's what I'm trying to really show you here. It's mechanical. Price comes into the list, price we wait, formations happen, and then we take the trade. It's mechanical. We know how much we're going to lose. We know how much we're going to make. Okay. And I'll tell you the difference here. Actually, that's my last part here is the MES versus ES, okay? So we're almost there. All right. So, but here's the kicker, folks. Here's the kicker. Targets are the most important part as well. Shit, man. There's all kinds of important parts, John. You keep telling me one thing's important, then the next everything's important, right? So there's a very important part to this. All right? And that's targets. If you have the wrong targets, I guarantee you're going to have a hard time. If you follow me out there on Twitter, you will see that our targets help immensely. We have some of the best targets out there. I say some, they're the best targets out there. Okay. I do teach targets in my library. That's not free. Um, so I'm not going to go deep into targets. But folks, when I'm posting stuff out there on Twitter, and what you're going to see on your screens looks like this, right? I'm going to have these white lines here, all right? And every night you wake up, and believe me, I'm just putting these on here for hypothetical, okay? I'm going to put one here. Let's see here. And let's come up here. Let's just say these are all targets. You get the point if you've been following me for quite some time. Okay. You're going to see something like this. And what I do every single night is I find supply and demand, or in most cases, Fibonacci levels that I teach as well. Or I'm looking at my arrows or color changes in the candle. It's very simple, I think. And once you watch the video once or twice, most of our members, you guys are doing really well. They post their charts in here as well. This is what we're looking for. Okay. If we wait patiently and we take the trade, our risk to reward, we know. So we're setting those up, right? Those templates I just showed you, we're setting those up, but we can also change them on the screen. Meaning I can move down, I can move up or whatever. Those little tags that show up on the screen. So you get like the little thing, that looks like this. And it says buy, sell, whatever. You can move those on the screen. Okay. So in this case, hypothetical, okay. I'm looking for this, this, and I'm looking for this target. This target right here is 28.32. Okay. The list tonight you can see is 28.26. I think that's a pretty good return. It's a pretty good return. Okay. And my stop is going to be probably 2.5, 3 points. So I like the return on this. Now, the only way that this is going to, let's say that I'm not going to take this trade. Can somebody tell me if this is actually what the candles look like when it happens? So we get a chaotic candle from here. We get, let's say, an inside candle. What do you do right here? This is hypothetical. What do you do? Do nothing. Anybody confused on that? Too close to target. Exactly. Price is coming into target, which I've already told you when I create targets to the upside, they are supply. Okay? So we look for them to be resistance until it's not. The process starts over. Right? Exactly. So, process starts over. This turns into this. Price breaks, price comes back, stops go in, okay? And then we look to trade to the upside to my next target. Everybody clear on that? All right, awesome. So that's how we approach a methodical, sequential way of trading. And I mean, it gets better than this. We trade higher time frames. We do this on equity. We do it with options. We do it everywhere. Pretty amazing. And the next thing for us to talk about, okay, again, I'm not going into details about targets. For now, maybe you guys have a way for anybody that's new in here, that's just checking us out. Maybe you have a way that you already find targets. If you don't have targets in your little tool belt, you better find some. I'm going to tell you that right now because my members will tell you that sometimes when the rest of the crowd is excited and we hit a target, this can happen. Okay? And if you didn't know this existed and you just went long over here, which a lot of people do, it's going to eat your lunch. Don't be that person. Okay? All right. So my next thing here is MES versus ES. Let's talk about ES. ES, really quick. Basically, you're leveraging. You're holding 500 shares of the SPY. Okay? You can do the math. 500 times whatever the SPY is going for. Okay? So if you look over here, the SPY is trading at 282. Do the math. 282 times 500. You're leveraging that many shares, folks. Everybody understand that. So let me ask you a question. Most of you, do you have enough money in your account to buy 500 shares? No, right? Most of you don't. Okay? Some of you do. So what the futures allow you to do is leverage. So this is why it's super scary. Don't sit up here and think that, hey, just because broker X, Y, and Z allows you to trade for only $4, all right, I'm making hypotheticals up. Because if we come over here, one important thing you guys need to note, if I click on the question mark, and right here I have the number 1 in here, this is how much it costs me to hold one contract of the ES or 500 shares of the SPY. Does everybody understand that? Everybody on board? Everybody get that? If you're using TOS, it costs $13,200 cost. It means you need to have it in your account. Okay? Just means you need to have it in your account to be able to leverage that. Okay, but $13,000, okay? $13,000 is not the same as 500 times 280. There's a huge difference. So in order to trade one contract of the ES, it costs that much money. So you asked what the difference was? It's $12.50 that you're going to make or lose per tick. There are 4 ticks in an ES, okay? And they're in quarter points. That's what I'm saying. It's 4 quarter points, okay? So for each point that you are correct, you can make $50 or you could lose $50, okay? Do we understand? Okay. On the micro, okay, we're going to come over here and let's look at the micro. So you can see during these volatile moments, folks, if you're wrong 20 points, it's going to cost you a lot of money. Okay, so this is why we use stops. Okay, all right. So on MES, click the little question mark. It's only $1.25. It's only $1.25, folks. Okay, now some people talk about commissions. Oh, but the commissions are expensive. Who gives a flying you know what? Who cares? Do you want to go into ES and be wrong and lose $1,000? Or do you want to come over here, pay $4 for commission, and maybe make 100? Who cares? You need to get comfortable. All right? You need to learn how to walk before you start to run. So this is $1.25 a tick. You can make a whole $5 for each point. Okay? $5 a point, folks. So when I use the MES, I'm just sharing with you, when I use the MES, I'll actually trade my strategy with a 10-point stop. So mine is, if you come over here, right here, it says micro, 1 to 3, 10 stop, 30 points reward because of the volatility we've had in the market. Okay? That's what I use. So it doesn't bother me. You know, one contract, you could lose $50. Two contracts, $100. That's going to be, I mean, that's going to be up to you, right? So if we teach you the process, okay? So if we teach you the process, does that answer enough questions for you, MES versus ES? There really isn't. Yeah, the futures have a tax advantage, exactly. 60/40, correct? 60/40. My CPA does everything, so. And also, guys, so futures, there's no PDT rule. No PDT rule. You can get in and out of futures 5 million times. Same way I was showing a while ago along, just the bracket trade. So say price is above the list and you want to take it at the list, you put your bracket trade right there at the list, whatever that number is. Does that make sense? Yep. There's a lot of advantages to trading futures. Hedging, 24/6, tax advantages, leverage, all that fun stuff. Okay. All right. Now let's go over here. You asked about SPY. So just so everybody understands who's in here, okay, everyone that understands that's in here, we use the line in the sand on everything. So not just futures. Okay, let me show you SPY. Okay, so the process is the same. SK worth, you following? The process is the same. Do you see the line in the sand here? It's up to you, right? You could do options, you could do shares, you could do futures. It's the same concept, folks. That's what's awesome. Everything we do is across the board. Yes, there's other micro futures. There's micro futures on oil, the NASDAQ, the Dow, all that fun stuff. Okay. So you guys can do some of your research for those kind of questions on the CME website. Okay. CME website. Go there. No problem. So yes, so you can trade the SPY. Okay. And you can see here, we use it the same exact way, folks. And the cool thing is with the scripts, you can go back and back test and see how they work out. Okay. These boxes, we call those the PMZ. Now, most importantly, how strong is the list? Don't you guys want to know that? I mean, I could go back and show you for the last 60 days and prove to you over left, right, and center how the probability is higher to make money off of here than you've ever seen. But for time's sake, I'm not going to go back that far, okay? How strong is it though? All right, guys, just like any other level, Trendy Edge, the PMZ, the line in the sand, your EMAs, whatever you use. For me, what I tell people is after about the second time, I start to get a little concerned. Okay, so what do I mean by that? Well, for example, here you can see price came down the first time. Look at that move, man. Boom, right? Second time, it dug in a little bit deeper. Boom. What do you guys notice about this? Can someone please tell me? What do you notice? A couple things besides that it worked. What do you notice? Yes, Mark, good job, man. Not a lot of people catch on that fast. Okay, and lower low. So what are you thinking to yourself? What are you thinking to yourself? So next time price comes down into the line in the sand, what are you thinking? Yeah, it's probably going to break, right? We don't know that, right? But we like to trade probabilities, and the idea is that we most likely can't break. Yep, exactly. It's not fresh anymore. Exactly. Bulls are losing. All right. Yep. They're getting exhausted. That's another way to look at it too. The exhaustion. Okay. Exhaustion. You can see that right here. Pretty cool. All right. So you start to put all those things together. It starts to make a little bit more sense, right? Now, some of you guys had said that you really want to learn about this. Do you feel like you got a good idea? Anybody still unclear? This is the time to speak up. Okay. I will be recording this. Okay. Sorry, I am recording this. I need to come over here to the messages because I don't typically look at the messages on here. Give me 1 second. I'm sorry. There we go. Let's look at chat. Probably missed like a million. I made it very clear. Awesome. Okay. Yep. Yep. Anything else that you guys want to see? I told you I'd come in right around 60 minutes, man. It's perfect. I'll keep going. I'll give you guys another 5-10 minutes. You can ask me whatever you want. So the best thing is the library. So if you're new here, guys, if you're new here, I encourage you to talk to our members and ask their experience. Nobody in here is paid to. They give you their own opinions, whether they like what they see or not. I leave it up to my members to speak about the room. I would say the library is the best place. Okay, right? Because I get some traders come in and like, John, I don't quite understand. I'm like, well, did you come in? Did you purchase a library? Or are you just here to get alerts, right? So what I will tell you is this: every script that we have is awesome. The question is whether you can execute it, whether you can wrap your mind around it. I'm not making this up, folks. I'm saying this out loud. I'm being very transparent. I have a lot of traders in here who are kicking butt using this process. There you go, Jennifer. Okay. And I wouldn't sit up here and say that if it wasn't true. Okay. I will tell you that people that probably leave the service is because they're not taking the time to learn. And I will also tell you, and I won't say names in here, we have people who came back who decided to learn the process and are now very thankful. Okay. It takes a little bit of time. You just got to be ready. All right. You just have to be ready. This is a serious venture. But one thing I will tell you is This can make you money on the regular, and in most cases, going to pay you better than what you're making in most cases. Okay. But as a disclaimer, I'm not telling you to take a trade. I'm teaching you a methodology, one that works. Yes, and that is something that is important. The list actually comes with the library. So if you purchase the library, you get the line in the sand. Okay. And by the way, things are changing. Jake sent out the message yesterday. Things are changing, folks. Everybody's grandfathered in. Okay, everybody's grandfathered in. That's a member by then. But things are changing. Okay, and you can scroll up for his post there. What do we have access for the trial? So what do you have is, yeah, you have the, so every morning I go live about 30 to 45 minutes before open. We go over the plans, what we're going to trade that day, what the market looks like. Um, you have access right now to look at all my swing trades and my broad market analysis, which is also trades. And then you have access to the trade plans and the focus trades. There's trades galore around here. All right. So the biggest thing I think that you need to concentrate on when you come into this room is fill the room out. Like, where do you want to spend your time? So some traders come in. It's very few, but I love being transparent and talk about the bad stuff. Sometimes traders come in and they're like, "Man, it's kind of noisy. I didn't know what to do." Let me make this simple for you, okay? Read the trade plans, the focus trades, watch my videos in the broad market analysis. And then Monday through Friday, just wake up, review the focus trades that I have on for the day. Go ahead and tune in if you can. And I would say please try to tune in 30 to 45 minutes before open. You'll know I'll set out a link. You link up, and it's the same thing. You're going to watch me, listen to me. I'm going to tell you what to expect for the day. And then we trade together. And if it's kind of boring, it's choppy, then I'll jump off. I usually only try to trade about 2 hours in the morning, and then the rest of the day is just managing swing trades. And if something pops up 60, 90 minutes before the end of the day, then I'll take a trade. One thing that I don't do is overtrade. Okay. And the cool thing is you get the plan before it happens. So if you go into the trades and take a look at those, you're going to see how they're written out. Okay. Which reminds me, folks, I just want to ask everybody, especially my members, sorry, my veteran members, if you notice, I'm starting to change it up just a tad without putting too many notes. A lot of the written instructions are going to be on the website that we talked about that we're rolling out here next week. It's all going to be there for you. So we're trying to make it as simple as possible. Okay. So if you go in there, you're going to see now it just says entry, stop, target, the trend that we're in, and so forth. Very, very straightforward. Yep. Yeah, that's a big point too. So if you want to back test my stuff, go into those channels and look at how we trade those and what happened. So yeah, I hope you guys enjoyed. I don't want to bore you up too much more. I appreciate you. Thank you so much for being here, and I hope that we'll see you in the morning. I'm excited about it. And please make sure that you go over to the broad market analysis, guys, especially new traders who are in here. Watch the video. Okay? Those charts are money. The room will tell you those charts are money. You just need to understand how to trade them. It's pretty straightforward. And anyways, we'll see you in the morning. I hope you guys have a great day. I know I'm gonna go enjoy my day, probably clean, and kind of go from there. But thank you so much.